recipes for technical trading success in Cook's Kitchen.
It's time to dial in on the September swoon. So I've given you some setups for the past few weeks, and one setup leads to another. I could say my predictions are unfolding, but I don't really speak in terms of predicting the future. I talk more about scenarios and probabilities. And once one scenario gets tripped off, it increases the probability of the next one. So here was the piece I gave you, a video, an article I did on September 9th. Real short article, is worth reading. I talk about the short and shallow bear traps of the previous 4 months. May, June, July, and August all had, 3% trips down to their 50-day, bounced easily. So the first setup was, we're due. We've just been on this freight train higher all year. The market is overdue for a pullback. Why not in seasonal weakness into September? I'm still bullish into the end of the year, looking for S&P 5,000. But I said it's time to keep the speculators honest. And, once everybody's in the boat. So what happened? Well, last Tuesday, September 14th, the market was real quiet. Hello, is this market on? I said to my subscribers, watching paint dry, right? And every morning there was a rally that turned into a stealth decline. So here's another setup happening. All we need is a catalyst, right? So I warned my folks last Tuesday. We raised cash the week before. Definitely the right call, because this slow motion rollover could easily turn into a big gap down one morning. And that will trap lots of longs who didn't see it coming. Okay, so that was September 14th. Let's look at the chart. There it is. The gap that traps. We closed below the 50-day. I don't think the NASDAQ did, but the NASDAQ also gapped, and this gap will trap us into the Fed. Remember I said that we just needed a negative catalyst, like any catalyst would do. So everybody's talking about Evergrande, Chinese contagion. Who cares? It's not going to affect our markets that much. But what's bigger than that is going into the Fed. And if they do decide to taper, because housing prices are running away, and we've also got the U.S. Fiscal cliff, all that DC nonsense. So those are things overhanging the market. And so to me, we need to really dial in here now that the scenarios are unfolding and one setup leads to another. I say, and I'm recording this before the Fed comes out Wednesday afternoon. So by the time you're looking at this, you're going to know the answer. But my prediction, based on scenarios and probabilities, is that we don't fill this gap today after the Fed, and thus we do not, even if we fill the gap, we're not closing above the 50-day moving average. Let's look at the NASDAQ 100. So here you've got a situation with, the big cap tech leadership of, we could try and fill the gap, but I still don't think we close back above the 50-day moving average. So what else was I telling subscribers? As we as we rolled into this, we'll look at that chart in a second, because that chart's from early September. So here on Monday, 9/20, I said, here we have it, the gap that traps, because it traps the longs, right? People who are now forced to sell, looking over their shoulder, hoping it doesn't get worse. Lots of worry, lots of fear, lots of little bit of FUD contagion, and then the algos love this, and bigger hedge funds who wait for this, because they just push it down and then start to flush everybody out. So I said I'd give 3-to-1 odds that we don't fill the gap and we don't get back above the 50 days. So that's a big fat no to any meaningful bounce. But we want to get ready to pounce, because as this is the chart I showed my subscribers from September 3rd, laying out where we're going to pounce if we get the big September swoon, which we are now getting. Remember, 43.70 was a level because it was support in July, early August, and then the dip in later August. We blew through that, right? We're well through that. So now we're on our way to S&P 4,200. 4250, we might have a pause because those were the July lows. But this big green box here, 4250 down to like 4165 were the June lows. That's going to be much bigger support. and I think we get there in October. So, it'll be a stair step down, but it's one you want to be ready to buy. And that's why I make these charts in advance, looking for opportunities like this. So hopefully you raise some cash and you're ready to do it. All right. Thanks for joining me in the kitchen, and we'll update this next week.